Hello, this is the chart profit video. A little more than 2 hours into the trading day, Friday 27th of October. This is from the pre-open. Looking at the E-mini S&P, we have 2-month point of control support at 25.49. This level here. Recent value areas in darker blue have all been printed above that level, just about. Seen a couple of tests, brief tests below that level, but the market has pretty quickly rebounded. As we've been saying for a while, first indication of weakness would be a value area printed below that level, unless that level migrates. So currently 25.49 support, holding pretty well. Looking here on the live chart, intraday chart, we're back up mid 25.70s. There's the last probe below that level. I've been saying as long as the E-mini holds above that level, it's in a strong price location in the short term. Also noted that significant selling, that would be marked in red on the profile, has not been marked for 48 days. And within that period, aggressive buying, that's green, has been marked 6 times. So looking here on the pulse chart, translated those imbalances from the E-mini profile across to the spider chart. So we started to see green or aggressive buying marked here back in August, and as you can see from that point we've had no red or aggressive selling being marked. Generally the market has come higher, so that's effective buying. Price momentum at the bottom here is above 0, so we have trend up, albeit slight divergence here as the price oscillator has been heading lower just over the last few days. If we look at the breadth indicators through Thursday, these bottom 2 indicators, the net new high is 25, that's a 5-day moving average in black, that's above 0, and the percentage stocks in my New York list greater than their 50-day moving average is itself greater than 50, so those 2 indicators combined means that the central band here on the pulse chart for breadth remains green and supportive. Currently, technically, this is the only minor problem. But if we look here at sentiment, just this week, last few days, we've seen quite an increase in optimism up to what historically has been warning levels. So my version, for instance, of the RIDEX assets ratio was higher yesterday at 15.88, and this is the highest ratio that I have recorded in my database. So the ratio of bullish assets in the RIDEX funds that I follow relative to bearish assets at its highest that I have in the database. This was the graphic I showed recently when the ratio was at 13.4. I can see the ratio has increased quickly. We've now hit a new peak in that ratio, and historically that's usually been a warning that there's too much enthusiasm, and historically it's meant that the upside is limited. First sign of that translating through to price is usually a red bar on the pulse chart, and we haven't seen that yet. Just back to this chart of the ratio. If we just look at the bull fund assets in isolation, this was the last time I showed that, and the level of bull fund assets currently looks like this. You can see quite an increase just over the last couple of days to a new high for the bullish assets year to date. Elsewhere in the sentiment indicators, we're looking here at the investors' intelligence. We're also seeing real enthusiasm for the market reflected in this indicator. This is the newsletters poll. This week the bulls percent was higher at 62.3, that's the highest since March. Bears percent almost unchanged, but slightly lower at 15.1%, that's the lowest since May 2015. And the ratio of bulls to bears is now at 4.1. You can see that ratio at the bottom here. We're currently at 4.1. Indicator has not been that high since 2015. Public poll from AAII. Bulls and bears higher this week. Black line down here is the 4-week moving average of the net, the bulls minus the bears. 3 weeks ago here that hit a multi-month high. The actual net number itself and the moving average not relatively that high. In the ebook each week we follow the spider at the front of the ebook, something called weekly structure. It just looks at where the week ends or Friday closes relative to Monday to Wednesday's range. Corrective weeks tend to have a U shape or tick shape. Sometimes weeks that trend will just start off relatively weak and finish strong, and we've seen something like that this week with Friday here closing back up towards the high of the week. In the slightly longer term, that would be further clue of a change in trend when we see a weak close on a Friday. Again, haven't seen that for a while. This is the Russell 2000 ETF IWM. You can see just from the chart itself, it's relatively lagging the spider, slightly underperforming. You can see it clearly at the top here, relative strength line of the Russell 2000 against the spider, just dipping a bit at the moment. Small caps underperforming. UK's FTSE 100 had a bit of a sell-off on Wednesday here, but struggled back to the end of the week. Still in a strong position here, consolidating above the 18 months at 74.13. So in the longer term, this is still a strong position. German DAX out to a new high today and above its 8 month here. We'll look at the weakness in the euro a little later. This is TLT, the T-bond ETF. In the short term, the most significant level is the 10 month at 124.40, and we're back below that in a weaker price location. Big support on this chart is down here, the major at 119. Also added in the halfway point from this low to this high. That's a dotted blue line. Found support here. Tested that at the end of this week. Currently just printing slightly back above that level. But this level here, 124.40, if we see price back above that, would put bonds back in a strong position. The longer we spend below 124.40, the more likelihood that we'll see a test of this level here at 119. So a quick recovery back above 124.40 would be helpful for bonds here. Removed the lines and added in the 40 period Bollinger Bands, which is the period I use on the daily charts. You can see at this point here we tested the lower band. There was a retracement to the central moving average, and then we turned lower. We're testing it again here. From this point in late August, we have seen a lower high and a lower low, suggesting the chart trend on the dailies is lower down. Price oscillator suggests the same thing. It's below zero and it's just turned lower. United States Oil Fund ETF, saying in the pre-open it's in a strong price location above 10.14, and we've popped today to the highest level since April. The dollar generally has a very good week this week, which we'll look at in a second. Strong day today as well. But gold ETF GLD, the major level at 119.84, which is this red line here, and we tested it here and held, and we are approaching it at the end of this week. But gold actually today, just today, holding up relatively well, considering the assumption that a strong dollar means a weak gold price. Question here on the dollar index is, have we seen a new trend emerging here? So we've had a long downtrend since the start of the year, and we've had a pattern at the bottom here, which I know that a lot of people have noted, this kind of inverse head and shoulders kind of pattern that the chartists get very excited about. We're pushing up here into that upper Bollinger Band, and we're actually seeing a higher low and now a higher high from the low in September. Some evidence there. The major is at 95.50, and price back above that and consolidating would strongly indicate that a change of trend has taken place. Just a simple reading through this year of the indicator shows you the trend. So we bounced a little bit from here back to the central line, and then again, but we couldn't get above it, and then again, and we couldn't get above it. And when we broke below the major, that lower Bollinger Band provided no support at all with the weakness of the trend. So currently we're seeing the opposite. We're pushing up into the Bollinger Band. If that downtrend was still in place, you'd probably see a reaction like this. So there's some evidence here that the dollar is turning, but price above that level at 95.50 would be a big confirmation in the longer term. If we look at the Euro FX chart, you can see something Looks a little like a mirror image at the moment with that kind of head and shoulders top pattern. A lower Bollinger Band now turning over and heading down, price pushing down into that. And a few weeks ago we looked at this pattern of higher highs and higher lows. We suggested at this point that might break because we had the possibility of printing below this level here. Didn't actually do that, but now certainly we have done that. So that uptrend pattern of higher lows and higher highs has been broken here. And the big level on this chart is 113.29, which is the major support level. Current price action suggests we could see that tested. Pound dollar chart currently maintaining its pattern of higher lows and holding above the 9-month at 129.95. Seems to be relatively some strength in the pound there, holding up much better against the dollar here, and this dotted line being the halfway point of the Brexit high to this low. Fairly useful level to follow. I'd say the price back above there would put the pound back in a strong position. Finally, the dollar yen, as I mentioned in the pre-open, in the longer term, all this price action here which took place above the 2-year controlling price, the red line, put it in a strong price location. We were having a problem with the half range resistance off this high to this low, but that has been exceeded. We're currently printing above that level. This is a strong position for the dollar versus the yen right now. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.